Hi everyone, in this video I will explain why the probabilities in this range are higher to still take out this high. I will cover several Elliott Wave scenarios, but I like to start with the one that you see on my chart, which is the lowest probability Elliott Wave scenario, but this one is vital in order to understand why the probabilities are higher to take out this high. On my chart, you see an impulse to the downside counted as a wave A or 1, followed by a sideways range in B or 2, and then you look for a wave C or much lower prices in a wave 3. What lowers the probabilities for this scenario is time. It is related to the vertical line here on my chart, which is a fib time taken from the start to the end of your wave A or 1, comparing this structure to the downside in time with the range that comes afterwards. You can see that price here is now ranging after a 6 fib time, and that is incredibly rare for a wave B or a wave 2, significantly lowering the probabilities. It's also not possible to move this B or 2 to this high over here. That would be okay in time. However, if we're looking for a wave C or 3 to the downside, we want to see motive wave structures. Either an impulse 1, 2, 3, 4, 5, which we didn't get, a multi 1, 2, 1, 2, 1, 2, wave 3, we didn't get it, or a diagonal, which we didn't get. It very much looks like a three-wave structure to the downside, which is not what you want to see, and therefore you gotta move your B or 2 to the right side, but then you get into trouble with time. So this is why the probabilities for this scenario are lower, which increases the probabilities that whatever is forming here is corrective and has a low chance of being impulsive. Let's then look at a couple of scenarios which would lead to price taking out the high. Starting with what you see here on my chart. This range is now counted as a WXY, flat in W, X, zigzag family structure, and then wave Y, a zigzag. After wave Y, we look for price to move towards the upside, either in a wave B of a flat or potentially impulsive in a wave 5 or a wave 3. Now this is related to the video that I made yesterday where I covered the 8-hour time frame, so please make sure to check this one out. Now a flat arguably would then be your quote-unquote bearish scenario because you're looking for a wave A, then you look for B and then wave C to lower prices. When C is finished, you then look for price to move back towards the upside. The most common target for wave B in a flat structure is the 1.236 to the 1.38, which is 106.8K to 107.4K. You want wave C to move below the low of your wave A, that is most common, so below 101.4K. Also, your wave B has to be a 3-wave structure, not just a 5-wave impulse towards the upside. It has to be a 3-wave structure, and most commonly your wave B is a zigzag family structure, like a 5, 3, and then a 5-wave structure, or maybe even double zigzags like a WXY, but by all means, a 3-wave zigzag family structure. You don't like this wave B to touch the 1.618 at 108.5K. That would significantly reduce the probabilities that you are looking at wave B of a flat structure. The second scenario is a triangle. So in this particular case, you then somehow have to count this as a zigzag structure instead of a 5-wave 1, 2, 3, 4, 5. Definitely it looks more impulsive than it does look corrective, this structure here to the downside, right? For a flat, it's a wave C, ABC, which means counted as an impulse. But yeah, anyway, for a triangle, this has to be somewhat of a zigzag structure. So that's a bit of an issue here for the triangle, I suppose. But you would then have A, B, C, D, look for E, and then price moving towards the upside. Invalidation is taking out the high over here at 105 before getting your wave E. And if you move to the downside, taking out this low is an invalidation as well. Then we get to a WXY, which basically leads to a continuation of the range. It is no problem for price to necessarily take out these lows, not at all. The probabilities remain higher that whatever is then forming is corrective and not impulsive. And that is the biggest message of this video. This structure to the downside as a wave A or a wave 1 has low probabilities, which basically means that looking for a wave 1, 2, and a 3 to the downside to much, much lower prices and a very big correction to the downside has lower probabilities than counting this as a corrective structure. Now here we then have W, that's your flat, all of this price action here then has to be a wave X, either a triangle or a WXY structure in that case. And then you still look for a wave Y to the downside, which by itself should be a zigzag or triangle. Now, if wave X would somehow turn into a triangle structure, A, B, C, D, E, then it is incredibly unlikely your wave Y is going to be a triangle, so look for a zigzag structure, right? But by all means, these are the two options that we have at the moment for wave X or for your wave Y. And you can see the polylines here on my chart with what type of price action you should then keep in mind for your wave Y. So yeah, you can still take out the low, but you're looking at a WXY, which basically means after wave Y, you're looking for price to move towards the upside. So the conclusion of the video, and basically what I said at the beginning, the probabilities remain the same. You're looking for price to take out that high, even if you continue this range in a bigger sideways WXY. Now, I'd shortly like to move to this chord and explain my thinking as this range was forming. So even though yesterday I covered the 8-hour time frame, as this range was forming, I kept an eye on what has been happening. And on the 14th of May, I wrote this message here. Feel free to stop the video if you want to read this in a bit more detail. But basically, the conclusion was it's more likely we continue this range compared to a significant big wave 3 breakout or multi-1-2s. Now, that is because if I open the photos, initially when price was moving to the downside, of course, looks a bit like a 5-waver, but then price moved up. Counting this move as a multi-1-2 had lower probabilities. Why? You can't move this last wave 1 at the tippy top here, because then this became a 3-wave structure, not a 5-waver. So wave 1 had to end somewhere here, but then this has to be a wave B top, but it touched the 1.618, very rare for a wave B, lowering the probabilities. Alternatively, if you wanted to see a breakout, then this had to be some sort of a diagonal, but the diagonal is not a very common structure. And after a diagonal, you still preferably want to see a deep retracement to at least the golden pocket to the 786 area, which is the most common area for a retracement after a diagonal anyway, which basically means you're looking for more downside anyway, even though it doesn't really have the highest probabilities. I was either looking for the WXY, which I covered in this video already, so you then have your flat, you have your X, and you look for a wave Y to the downside, or we had the option for the A, B, C, or 1, 2, and then wave 3. At this moment in time, this was still an option, but as more information came in, of course, this scenario now has lower probabilities. But you can see that initially, we were still looking for price to move towards the downside. And if I then scroll to where we are basically now, then over here, right, this was last night, I started to cover these scenarios that I explained in the video right now. And then this is, of course, basically everything that I covered in the video, which is the analysis from this morning. So you got to give a range a bit of time to form. People generally like to be very quick and expect what's happening. But after this move down, I just wait. Once this move to the upside forms, that is when I slowly but surely start to get interested to count the range. And now, of course, as we have been very patient, we get a lot more clarity, being that the probabilities are a lot higher to still take out this high, which is then also the directional bias. The range after the move down is over 6 times longer. This reduces probabilities that this range, which is in white, by the way, which of course in this scenario, if I can click the eye, there we go. The range here in white, right? Unlikely it is related to this move towards the downside as a wave B or a wave 2. This increases probabilities that this range is corrective, not impulsive, which in turn increases probabilities to still see this high taken at some point. Now you can see here the different scenarios. Mind you that, of course, this can also be continued and then either your wave 5 or your wave 3, by the way, doesn't necessarily need to fall to the downside. So once price, if you would take out this high, please be aware of the potential of continuation. You just got to observe the resistances here and what price does. But this is basically a summary. Lowest probability is just this red line to the downside, looking for a big wave 3 to much lower prices. Probabilities are higher. You're either going to continue this range in a more sideways manner, or you just take out that high, look for either a B or a 5 or a wave 3. Now, I think it is good if I also show you some of the areas of support and resistance. So on my chart right now are basically all the levels that are close to price. These are all the horizontals that I have, and you can see here at 106, we just missed out on touching it. We have the value area high of basically the big range that we've been in for months now. Then we have the point of control, daily naked point of control, and eventually, of course, the all-time high at 109. So you can, of course, put these levels on your chart if you wish to. I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.